Look at Australia now. Its central bank will decide tomorrow on whether to raise interest rates in the wake of a worsening cost of living crisis. Some economists warning that a further rise in the official bank rate risks tipping Australia into a recession. Maynard with this report.
For Barney, a 61-year-old artist and musician, it's tough finding work these days, and making enough money to put food on the plate isn't easy. He's one of many who turn to the Loaves and Fishes restaurant for a free meal and social support in these difficult times.
It's vital, it's absolutely essential. This place and places like it. It's a spiritual home, it's a beautiful place.
The Loaves and Fishes has been feeding Sydney's poor and homeless for the past 40 years. It's run by the Reverend Bill Cruz, who's provided a staggering 500,000 free meals over the past year. And right now, he's never been busier.
Basically because the needs increased fourfold for us, and we're getting people who we never saw before, people who just don't earn enough money to pay the rent or the medical bills or anything like that.
This is the harsh reality of life for so many people in Australia's big cities today.
It's very important because it actually helps me financially and emotionally, and I have a lot of friends that support me here as well.
It's because so many people are struggling with a higher cost of living that this week's meeting of Australia's Reserve Bank is so crucial. Even the so-called working middle class are finding there's little left over to pay the bills. At the top end of town, even large companies are facing the prospect of lower profits. In Parliament, the government is under pressure from the opposition, who accuse it of mishandling the economy since it came to power.
They always miss out the fact that interest rates started rising on their watch after they handed down the highest inflation quarter. The highest inflation quarter was March 2022.
Inflation has certainly begun to flatten, with the latest figures revealing a drop from 4% to 3.9% in underlying inflation. However, in the 3 months to June, consumer prices actually grew by 1%. Most economists believe these figures are not enough to persuade the RBA to increase the interest rate again.
There was a lot riding on these inflation numbers, some sort of as a make or break inflation number. In the end, they came in fairly benign. Yes, the inflation rate has moved up a little bit, but it was in line with expectations. It wasn't higher. The big fear was that it was going to be higher.
Back in the Loaves and Fishes, they're not expecting an early fall in demand for their services. Bill Cruz describes the situation as terrible.
Dire. I don't see things getting much better for the next 4 or 5 years. We're a really good barometer of how the economy is.
The key drivers of inflation, such as housing, utilities and rent, as well as everyday food costs, continue to rise, and there are real concerns about a recession.
Look, I'd have to say the risk of recession in Australia is high, and this is something the Reserve Bank has to allow for, because if we tip over into recession, then that will probably knock the inflation numbers way down below their target of 2 to 3%.
But there is light on the horizon. Personal income tax cuts are beginning to flow through, and a cut in interest rates in the coming months would certainly ease the pressure on homeowners with a large mortgage. For the government, which has to call a general election by May of next year at the latest, the good news couldn't come soon enough. Maynard, CNA, Sydney.